I'm really glad to have a chance to talk to this audience about housing, land use, because there have been a number of misunderstandings perpetuated. We're in a time of crisis, although it does appear that things are starting to get better. And in times of crisis, people use snap judgments, people look for things to blame, and I think a good deal of misunderstanding has been perpetuated. In particular, I am concerned that the effort that many of us have been engaged in to build decent, affordable rental housing is under unfair assault and somewhat inaccurately. We are in a terrible financial crisis today worldwide, and the single biggest cause were subprime home loans that were made that should not have been made by people who shouldn't have been making them to people who should not have been receiving them. And many of us did see the problem of the subprime crisis. What I did not foresee, I don't think many people did, compounding the fact that a lot of bad loans were made up front, was the wonderful sophistication of our financial system in taking those bad loans and sharing them with the rest of the world through collateralized debt obligations, through the whole process of securitization, ultimately through credit default swaps. Again, no one foresaw the extent to which financial innovation, technology, a lot of things that were good, a lot of liquidity, took, as I said, loans that should not have been made at high interest rates and sent them throughout the world. Now we have two things to do. First, we have to make sure this does not recur, or do as much as human beings can to make sure it doesn't recur. We are well on the way to doing that. The chairman of the Federal Reserve, Ben Bernanke, this year used authority that sadly Alan Greenspan had from 1994 on and explicitly refused to use. Namely, Mr. Bernanke promulgated rules that will soon go into effect that will prevent irresponsible subprime loans from being made. Now, one of the things that you know that people have been objecting to in some circles is the Community Reinvestment Act, and they've argued that that caused the bad loans to be made. The facts are overwhelmingly the opposite. Two groups of institutions have originated mortgage loans, home mortgage loans. Historically, almost all of them came from banks and credit unions, regulated institutions that were using deposit funds, and because they were using deposit funds, were tightly regulated. Banks and thrifts in that category were covered by the Community Reinvestment Act. The point, however, is that the overwhelming majority of bad subprime loans, loans that should not have been made, were made by the unregulated institutions, the non-banks, the mortgage finance companies and other entities, which are not covered by the Community Reinvestment Act. If you look at the mortgage loans that were made by banks, originated by banks covered by the Community Reinvestment Act, there would not be a crisis. The crisis came because we had unregulated entities making these loans. And they were not only making the loans, but they were securitizing them. They were lending people the money, and instead of collecting that loan, they were packaging them and selling the right to collect to other people. Apparently the system forgot a simple truth. Most of us are a lot more careful with our own money than we are with the money of strangers. And if I'm going to be paid back by you, I'm going to give you much more of a frisk than if I'm going to sell the right to be paid back by you to a lot of other people. What Congress did in 1994, showing a lot of foresight, and I wasn't one of the authors of that, so I'm not patting myself on the back here. Seeing that these new unregulated entities were making a lot of loans, Congress said, okay, to the Federal Reserve, would you please promulgate some rules that will keep these bad loans from being made? Essentially, what we wanted them to do was to look at the kind of rules that the banks are under from their regulators and apply them to the unregulated entities. Some very radical rules, like don't lend people money if they don't have any. Don't let them make up their income. Don't give people a benefit for steering people into higher interest loans. Don't lend a lot more money than the property is worth. Banks have to live by those rules. The non-banks didn't. Alan Greenspan said, no, that's regulation. I believe that the market knows best. And he consciously and explicitly refused to use, for the 11 years he remained in office, the authority Congress gave him to regulate the subprime loans. What happened, of course, was, and there were some efforts in the Congress to do this, but again, there was a philosophical difference. Some of us tried to regulate the subprime loans. By the way, I do want to say, I'm not accused of an excessively partisan view here. This is all documented in a new book called Financial Shock, a look at the subprime mortgage implosion and how to avoid the next crisis. It's a very good book. It's written by Mark Zandi, who was a very high-level advisor to John McCain on economics. These are uncontested facts. Congress did try, in the absence of the Federal Reserve, to regulate the subprime loans that were being issued outside of the Community Reinvestment Act. Again, when I talk about loans issued by unregulated entities, I'm talking about loans issued by entities not covered by the Community Reinvestment Act. And we were frustrated. Finally, in 2007, there was a change in party control. That's relevant because there has been a difference in the philosophy of regulation. When I became chairman, one of the things we did in the first year was to pass a bill restricting subprime loans. At that point, Chairman Bernanke, to his credit, said, you know, I see you guys are doing this. Let me do this. I think I can do it right with this regulatory authority you gave me. And Mr. Bernanke used exactly the regulatory authority that Alan Greenspan refused to use to restrict these subprime loans. There will not be this explosion of subprime loans going forward. Now, that doesn't mean we're entirely out of the woods. We still have the problem of unregulated credit default swaps and collateralized debt obligation derivatives. The credit default swaps, as you know, are a wonderful instrument. They were unregulated, unlimited, not known to anybody, in which companies sold insurance to other companies against the failure of complicated financial instruments. They did so confident that these financial instruments would never fail. So they issued insurance without any account of how they were going to pay for it if they had to. And they really thought they were issuing insurance for events that would almost never happen. And they were not required by any law to have reserves. If somebody insures your car, your life, your house, they have to have reserves and show it to a regulator. The credit default swaps are unregulated. So you had people lending unlimited amounts to insure against events they thought wouldn't happen. And I think the best way to explain it is they were like people who decided that they were going to issue unlimited amounts of life insurance on vampires. But then the vampires died, and they were in a lot of trouble. The event that they insured against had started to happen. And then they cascade, because some people can't pay other people who can't pay other people, and they cascade. So next year, step one, urged on by a bill passed in the House, Chairman Bernanke has now, and this is good news for the future, restricted the subprime loans of the abusive sort. And now we will have as a high priority regulating the hedge funds, the investment banks, if there are any left, the private equity entities, anybody who is engaged in this highly leveraged activity. Because, again, securitization is a lot of the root of it. People lend other people money and do not expect to be the ones repaid. We have too much risk going on in the society and too much leverage. And when people take on too much leverage and things go bad, they then have to get rid of too much leverage, and that's been the issue that we've dealt with. But that's the financial regulation, and we will get, that's a very high priority for next year. We go back to housing. I mentioned that thanks to Chairman Bernanke, after the House acted, we will not have the subprime exposure next year irresponsibly. People then say, well, what about low-income people being able to get houses? Well, the lower-income people who've been getting subprime loans fall into two categories. People who should have gotten loans and people who should not have gotten loans. And let me begin, because one of the things that's happened is this confusion